What's going on, everyone? In this video, we're going to be talking about how you can build your first Airbnb cabin with a VA loan. Welcome back, everyone. So this topic is something I've been wanting to talk about for the last couple of years. It's a powerful strategy to help you obtain your first vacation rental cabin with essentially no money down. In this video, I'm mainly going to be talking about building your first cabin with a VA loan, but some of this stuff I'm going to be talking about can also be used to simply purchase your first cabin compared to building. So let's go over what a VA loan is. A VA loan is a loan guaranteed by the Veteran Administration. It allows for a borrower to get a loan at 100% loan to value. That means that the service member does not have to essentially go any money out of pocket if the home appraises for what the service member is purchasing or building the home for. You can also roll in closing costs into the loan, again, if the home appraises for that much. On the last time I used this strategy, I barely paid like $100 at the closing table just to start my first construction project. That was the first cabin that we built. Another great thing about VA loans is you don't have to pay for private mortgage insurance, PMI, which can save you tens of thousands of dollars over the life of the loan. The VA does have a funding fee at 1% of their loans, but if the service member has any type of disability rating from the VA, this 1% funding fee can be waived. Even a 10% disability rating will have the funding fee waived. This strategy can be used if you're first starting out and don't have too much money to put down on your first loan. The key to this is finding a lender that will allow you to do a VA construction loan with a one-time close. This didn't really exist until recently. I found a lender that I'll link them below. And if you can learn and apply this concept correctly, it will allow you to get the ball rolling with your real estate investing and help you grow a massive portfolio. That's how powerful this strategy is. When I first started, I didn't really have too much money to put down, and this helped me get to where I am now. I like to look at this concept as the house hacking version for VA loans and Airbnb investing. What it entails is building a home with a detached accessory dwelling unit. An accessory dwelling unit is essentially a mother-in-law suite. That way you have a home to live in for yourself, and then you also have a unit that you can rent out on Airbnb or any type of short-term rental like website or platform. And you've got no money down or out of pocket besides purchasing the property. So like getting like the couches and the beds and everything, the TVs. But so like say in 6 months to a year, things sort of change in your life and you don't feel like living in the home anymore, then you can move out and rent out both the primary home and the accessory dwelling unit on Airbnb, which is what we ended up doing. In this way, you have acquired essentially 2 units and you've gone no money out of pocket besides, again, furnishing the home. Now, before you say that this is illegal and that VA loans are not made for this being like investment properties, I want you to know that this is happening every single day outside of Airbnb investing. There have been numerous books, videos, and courses that have talked about the concept of investing with government-backed loans, FHA and VA loans both. The concept of house hacking is essentially purchasing a multi-unit building like a triplex, duplex, living in one of the units and then renting out the other 2 units to pay off the mortgage while you live essentially payment free or mortgage free. That is essentially what you're doing here though. Instead of purchasing, we are building 2 cabins with a government backed loan. We are living in one unit and then renting out the other unit. I hope that makes sense. Another thing I want to talk about that reinforces this idea even further is the VA does allow you to purchase, or if you could find the lender for it, build up to a quadplex 4 units with your VA loan. So essentially what I just said, a quadplex is a building with 4 units. Now imagine that. You purchase or build a quadplex, live in one of the units, then rent out the other 3 on Airbnb. If you are in an area that sees a somewhat good amount of tourism, I guarantee you will do very well with 3 units renting out on Airbnb consistently. For this strategy to work, you have to make sure that you have not used your VA loan yet, or at least you have enough money in your VA loan to be able to qualify to build 2 dwellings. Next, I'm going to go over the 2 lenders below that I recommend using to accomplish this. The first one is AFR, and the second one is VA Nationwide. These 2 essentially offer the same exact loan product. They offer 100% financing with a one-time close loan. I'd recommend going with either one of these lenders compared to try to going out and finding a local bank or a different lender. The reason is I have spent the last couple of years looking for lenders that do exactly what we're talking about here. I've interviewed or talked to every bank that claims to do these types of loans, and essentially these were the only 2 ones that actually delivered when it came to detailing what they recommend. Just make sure that you detail what you want to do with the detached accessory dwelling unit, the mother-in-law suite. Lender requirements changed all the time. So if the lender will not allow you to do the ADU, the accessory dwelling unit, then what I would recommend is going out and finding a property that will allow you to eventually build an ADU on the property. So it's like, what that means is like you're purchasing the property and then you're finding a property that has enough land on it that sort of would give the 2 people privacy that are booking to be able to build a second one. So you're finding a piece of property, a property that allows you to eventually build an ADU on the land. I recommend this with any piece of land that you purchase. I recommend planning to eventually put at least 4 dwellings on each piece of land that you plan on buying. I'm going to do a video in the future talking about how to find the right piece of land, but for now it's important to find land that would fit at least 1 acre per dwelling. So 1 acre per dwelling. This is important because it will give your guests some privacy from the other homes. If you're building closer in the city, then this may not be possible. Another scenario to look into when talking to these lenders is to ask about if they lend on modular homes. This is a new strategy that I recently discovered, and it came out of necessity. In 2020 and 2021, COVID caused lumber prices to like skyrocket. My builder and I did not feel comfortable building a new project at the current lumber prices, so we started looking at alternative structures. We found a modular log cabin company relatively close to us. This company built log cabins off-site, and then they're delivered like a mobile home. When they're fully built, they look like a normal stick-built home. This helped us a lot because the homes were purchased at a fixed cost. So if the lumber went up or the lumber continued to keep going up, we wouldn't have to pay the difference. And 2, it was quicker than building from scratch because we didn't have to deal with things like weather since they are built off-site in a temperature-controlled facility. I didn't end up using a VA loan for this, but the 2 lenders that I mentioned could have gotten the deal done with a VA loan if I did the modular home route with the VA loan. I would also like to mention that if you can find a log cabin builder that does houses like this in your area, I'd go that route with the first couple homes. Log cabins are very popular on vacation rental sites like Airbnb and VRBO. They are usually the first properties to book. I would say log cabins fit almost in any type of setting besides the city and beachfront. Every other setting, they fit in pretty well. They do well in any type of wooded area, they do well in the mountains, and they also do well on lakefront. The top 3 performing properties in my area are log cabins. Lastly, I want to talk about investing for the long term with your VA loan. This strategy is also used with single family homes and long-term leases, but the cash flow is absolutely supercharged if you use it for Airbnbs and VRBOs. You're lucky to even get like a $500 a month cash flow from a home after all bills are paid and if it has a mortgage on it, if you're doing a long-term lease. Now, if you build the right cabin for vacation rental purposes, you can easily cash flow $5,000 to $10,000 a month on the same borrowed money. That's like owning 10 to 20 long-term lease properties. Like, I hope that makes sense because that's a very important distinction there. It's like owning 10 to 20 properties. So what I want to talk about now is not many people know this, but you can refinance out of your current VA loan into a typical investment property loan and use your VA loan again to do the same thing with future cabins. Typically, when you build a house, it's worth more than what you built it for. This is excluding major events like recessions. Even at the bottom of some real estate markets or some real estate market cycles, you still tend to have new construction appraised for higher than what it was built for if it was built in a desirable location. Normal investment property lenders are going to loan at 70 to 80% of loan to value. Loan to value is important compared to loan to cost. So let me give you an example. We built our current cabin for $150,000. It appraised for $275,000. I used the VA loan to build that property at 100%, no money down. If I go out and find a lender that does a 70% loan to value, I can easily refinance out of my current VA loan, and then I'll be free to use this entire strategy I just talked about again. That's because my loan to value would be $192,500. And since I built the house at $150,000, I would have about $40,000 I can play with. This means, again, if your lender allows it and you can qualify for it, you can pull out some of that money to pay off any type of debt, or better yet, to furnish it for you, to pay for furnishings for your future projects. So that's it. This is a very powerful strategy if it's implemented correctly. It's not a get-rich-quick thing though. It's a long-term play because if done correctly, it can generate some serious cash flow for you and build wealth over the course of decades. So I hope this video has helped with getting some gears turning in your head. If you have any questions, please feel free to leave them in the comments below. I respond to every question or comment asked. Also, if you would like to schedule a one-on-one call, I've included a link to that below as well. I hope everyone is staying safe, and I'll see everyone on next week's video. Thanks.